Hey traders, welcome to our Sunday show. I am Raghee and this is my report. Welcome, gang. Hope everyone's had a good weekend so far. We're going to take a little 30-minute break in whatever you might be doing and taking a look at the way in which the markets have opened, what kind of mood are indices, futures in general in as we start this week, this post non-farm payroll week here in December. All right, so just a couple things before we get too ahead of ourselves, which is, as we begin any new week, if you're not already making this a regular part of your schedule, please let me remind you, check out Forex Factory, check out Trading Economics, Econo Day, whichever one you like. I tend to go to Forex Factory, which is what this is right here. And make sure you know what hot zones are scheduled this week, when they're going to be released, what time. ISM services, PMI tomorrow, that is going to be a hot zone to watch. That's going to be Monday at 10 a.m. You scroll through. Tuesday's pretty quiet, pretty much non-existent in terms of hot zones for us on Tuesday. We go into Wednesday. And, this brings up something that the Forex trader in me is quite acutely aware of. But the futures trader in me, the stock trader in me really doesn't care that much. And frankly, it's really not that important when it comes to, say, BOC. There was a time where some of this might have been a little bit more important when we're beginning a tightening cycle or when we're starting to wind down from a tightening cycle. That could be a little bit of a mover. BOC has moved the market in terms of equities before by way of having a shift from central bank policy that was different than what the U.S. had. In fact, it was only maybe a meeting ago that they hiked less than expected. And by hiking less than expected, this sort of less hawkish wave of sentiment kind of worked its way into the U.S. equity markets. So those kinds of things can happen. But for the most part, I'm usually not that concerned about other central bank statements other than the European Central Bank, other than the ECB. Getting into Thursday, our typical unemployment claims, although we do have ECB President Lagarde, that's going to be one to keep an eye on. And then core PPI and PPI coming up, along with preliminary University of Michigan consumer sentiment. None of this data is going to be quite as meaningful as last week, where PCE and non-farm payroll were released. But following up on that, is the data enough to keep expectations for where rates are expected to go? Never this is where rates are going, never where this is where the market is going, but rather what is priced in. And that's a very different way of looking at the market, gang. Noobs and egomaniacs talk about this is what's going to happen. This is where the markets are heading. Avoid that. What we're always interested in, and it's nuanced, but it's very different. Experienced traders will say, okay, this is what we're expecting, but this is what's been discounted. This is what's baked into the cake or priced in, because we're measuring psychology. We're not calling, we're not Babe Ruth at the plate pointing at the stands. And for a lot of traders, that's what they like to do. I see it a lot. I guess we've all been there, and eventually we'll have some emotional maturity and get over it, right? But be careful of people who do that. Remember, we're always measuring to see what the market is planning. Okay. With that in mind, what is the market planning? What is the market expecting? The way that the market is moving now is planning on, of course, this can change, planning on staying in the 5% realm of target rate probability come May. I will also mention, is a little bit different than what we've talked about in the Charts and Coffee or the Raghee report, which is we're seeing maybe March where we'll reach that peak rate or what's known as the terminal rate. If we top out at 475 and 5, then we're going to peak out in March of next year. But if we end up going towards, say, 5 to 5.25, that might lead us into May of next year. Remember, we trade what we see, not what we think, and that's just a matter of maturity as a trader. So I lacked it once upon a time, early in my career. So if I can help you from making those kinds of mistakes, just say, what do I see? Not what do I think? Not what are other people talking about, but what do I see on the chart? Not what the headline is, not some chucklehead on television. What do I see? And it will set you straight. It'll keep you from making a lot of mental errors in your trading. Okay. All right. So with that in mind, keep an eye on that economic calendar, trade what you see, including those hot zones. Let's get to our questions. All right. First up, and gang, my friend, I'm put this up here, not because I'm going to answer your question. I couldn't possibly tell you what to do with your retirement account. I hope you realize that that would be completely irresponsible of me to even make a comment of that. All right. So I appreciate the question. I don't want you thinking that I'm not acknowledging it. I'm acknowledging it and just reminding everybody I couldn't possibly tell you what to do with your retirement. Right. I can tell you all what I'm adding to a portfolio and why. Right. And that's something I do in the Sector Secrets Mastery. But without an understanding, obviously what you have, I mean, please know there's no way. And by the way, it's not just me. Anyone who answers that question with just that little bit of information is doing something, frankly, unethical. There's just no way anybody can answer that without a lot more information. Okay. So with that being said, I just wanted to acknowledge the question, tell you, I don't know. Okay. All right. Let's see. Next up is, the show starts at 6:30. I believe, and that's I believe what time we're going to be moving to. So if there's any questions or confusion on that, yes, we'll be doing a 6:30 show from here on out. Okay, we've been doing that now for a couple weeks, I think. Maybe it was 1 week. I don't remember now, but we'll be doing a 6:30 start time from here on out. Thank you for flexing with me during this update. All right, next up is Robert. How are you, Robert? Any thoughts on energy for upside going into January? Robert, how we just get through December? I've got no idea. Again, trade what we see, not what we think. How about we just get through December? How about we just trade what we see right now? And I don't fool anybody into thinking that I know where a market's going to be 4 weeks from now, right? All we can know, gang, and I know I'm going to sound harsh when I say this. Why are we even asking what's going to happen in December? And either you resonate with this and Rog, I get it, or someone doesn't. There's no way. I'm watching football right now with my husband. I'm watching the Dolphins and the Niners play. I don't even know how that score is going to end, right? That's exactly what, when we watch people on television or people who are willing to say, oh, yeah, the markets are going to be here in January. That's like me telling you how the 49ers Fins game is going to end. And if I did that, a lot of you thinking, Rog, you're just guessing. It's no different when it comes to the market. So please, gang, can there be a wrong question? Yes. We can ask. I can ask the wrong question about the market. Where are you going to be 3 months from now, 6 months from now? The bots tell me the Niners are going to win. Even with Garoppolo with that messed up ankle, bot's a Niners fan. You think so? Yeah, I saw they were up by 7. So, but I hope you appreciate that, Robert. But let me answer your question because you're looking in a really great spot. And I'm with you. I want to look for upside through December on pullback. So remember, I've never known where a market is going to go. I make educated decisions. Call it an educated guess if you'd like. I don't mind that. I make educated guesses based on the structure of the market and where previous support and resistance has been, where volume is waiting, and what the market structure suggests the path of least resistance is. And I'm with you. I like the upside. Directionally, we are absolutely simpatico. We are on the same brainwave there. I like XLE. I like XLM. I like CVX, to your point. Conoco Phillip could be tricky, though. So I'd be careful with the stocks that have weighting in both the FCG ETF and the XOP. Let me show you what those two look like. Okay, so this is XLE. This is Exxon and Chevron. For all intents and purposes, this is Exxon and Chevron. If I go take a look at FCG, now, if you're not familiar with FCG, gang, Robert, I think you probably are, right? So for those of you that aren't, FCG is natural gas. FCG is natural gas. FCG and the XOP, which is your oil and gas explorers, share a lot in common. And these are not quite in the same condition that they were even just a week ago. So, say CLR Hess might be interesting in XOP. Let's go take a look at XLE. All right. So if we take a look at the XLE, MPC, PSX, right? So I may not actually look at XOM and CVX right now. I may go further down the list to look at Marathon and Phillips. And that's just what we have right now. But I do like the upside. Okay. I absolutely do like the upside. All right. Okay, cool. So I hope that helps. And bear with me here. Bear with me here, gang. Okay. And then next up, we have next question here. UNM. Hey there, Darren. I would stick with the long side. So I like the idea of a long. So Darren, the question here is it a trend or is it chop? It's the latter. That means I need an oversold buy. Use a slow stochastic, use a V-score. I would say look around 39 and a half. Look around 39 and a half, okay, on that one. You can look at maybe see where we bottomed out before back on, say, Wednesday, November 16, Thursday, November 17. Look for something like that. That could be an interesting move if we get that market down to that level. Directional bias is bullish. Nice Darvis support. All right, next up, Erica asks, news doesn't seem to be as active this week. So economic data, right? Do I think equities might be a little calmer, have more follow through during the more, so this is a little bit more of a day trading question. Sure, Erica, when we don't have, I will tell you this, my assumption is we just won't get these big volatility, intense sort of moves at a certain time. But sometimes, yeah, they can. It's not that they'll be quieter. Sometimes it's not that at all. Sometimes having a high impact hot zone looming keeps the market in a range, and not having a lot of that, kind of having some blue sky, you'll see the markets might take on a little bit more of a direction. So I don't know. On one hand, we will see high impact hot zones create a little bit more of a wait and see type consolidation, while other times not having something seems to trigger sort of a freedom to move the market around. So I've seen both situations, throughout summer and fall. All right, Trader Momo asks, let's see, the show still says it starts at 6. Oh, okay. Gang, the show is going to start at 6:30 like it did before. So thanks for letting me know. I'll make sure I check the programming on it. But yeah, 6:30 from here on out. So thank you. What sectors am I looking at for the last few trading days of 2022? The same ones. So this month, Mr. Walker, I'm looking at wherever we have decent trends. It's not that different, gang, than what I've been talking about in the free videos for some time. Dow, financials, healthcare, transports, industrials. And then, if you want to throw energy in there, that's fine too. So of the major sectors weighted within the averages, that's really where I've been focused. And I'm going to continue to focus there. Now, might there be more organized structure as we progress through December? Yes, which is why watch lists are always this fluid conversation. We're always monitoring. We're always looking at the structure for quality and whether or not that new trend is established, things like that. But for now, that is what I'm looking at. And that's pretty much echoed what we've been talking about in the free videos and charts and coffee for, I'd say, a couple of weeks now. So nothing's really changed there. Hey there, Neon, what does FSLR and the solar space look like? Sure, sure. So FSLR is in a double green. And then solar space, if you want to look at say tan. So if we're going to look at tan, tan's a funny little corner of the solar space. So if I pull up the holdings in tan, and that's exactly what you have here, right? And tan is a high concentration weighted sector. FSLR is about 10.5%. And let's see, run. So it's a little bit different now than things get a little squirrely as you go down the list of holdings on tan. I believe tan is fairly liquid. I'm going to go check that here. I'm going to just update this here real quick. I believe tan is relatively liquid, but I really, if I'm looking at tan, I'm either looking at the broader, the tide, looking at the tide, or I'm looking at end phase or first solar. Let me take a look at what tan liquidity is in January. So at least going out to 20 January for the expiration, we want to focus on mostly the 79 to 75 calls. Let's see here. So I'm looking for liquidity first. I mean, I know where I'd like to see the market pull back to. So 70 is liquid, 75 is kind of liquid. So I'd end up looking at the 75 calls. Not awesome. Not awesome. But buy the dip is valid. Now, what about FSLR? Like you said, that's absolutely fine for a buy the dip. And then if I'm looking to buy the dip, I want to focus on probably about one. Let's see. We can get aggro at say 160. We could get aggro at 160. But let's say we're looking at something more along the lines to a pullback to the 34 EMA on FSLR. 156.5. So is my pullback. So the 155 calls look pretty good on FSLR if we get a pullback. So that's what I'd look at. They look pretty strong. They look pretty strong. Grace, my thoughts on MPC, as we mentioned earlier, is it's a really good corner of the market in terms of keeping a double green in that XLE. All right. All right. So next up is, do I have a suggestion for when the HPMR ranges invert from the normal resistance support? Okay. So when they invert, and that's by design, and by invert, let me show you what that looks like here. All right. So if you take a look at, here we go. You take a look at, say, for example, the ES, and you'll see what inverting looks like right there. That's by design. It's not broken. HPMRs are not broken when they flop or invert or sandwich or overlap. Take a look at the candle that accompanied that move, right? Take a look at that move right there. So what we have is higher than normal volatility. That's all that it is. It's just higher than normal volatility. When we get higher than normal volatility, the HPMR say, look, we have moved past that normal historical volatility, and visually, this is how it represents it. So when it overlaps or inverts, that's a really easy visual reminder that we've moved beyond the historical volatility that these zones rely on, so that we have this space between the resistance and the support. All right. And that's usually going to happen with hot zones. If we're going to in some way be able to plan on when that might happen, the hot zones will be a great time, Mark, to presume if there's a likelihood for that, if we're susceptible to it, it would be with the hot zones, with these high impact releases. All right. Next up is, does the S&P look like it's going to reverse this week? Well, again, gang, do yourselves a favor. Stop implying fortune telling, soothsaying, and whether or not something's going to happen one week or the nobody knows. And I realize this is a message that I've been trying to convey for my entire career. And yet a lot of traders out there talk as if, well, this is the week for the reversal. Again, nobody knows, right? So let's start off with remembering nobody knows where the markets are going to go. We only play probabilities. If I'm looking for the S&P to reverse, there's a couple things that we want to remember. One is, why? What are the whys that we might look at? Could the why be price? That could be possible. Anchored VWAP or a 200 exponential, maybe a 200 simple. The next thing would be when, right? Again, I don't know, but those hot zones that are on the economic calendar, that could be the catalyst that has traders change their mind. But remember that a hot zone can as much accelerate the current, and frankly, the S&P is in a trend now. It could easily accelerate the current trend as it could create some kind of resistance level and subsequent sell-off. Okay. And then the thing to remember is once you've got the why and you've got the when, well, at least you can narrow it down. But then we never really know. So the structure is really important. I will not short a green trend. That's just me personally. I will not structure. Here we go. I will not short in a bullish structure. It's lower probability. However, if you're wondering, okay, could we move lower? That would be resistance. Breaking the minor low would be a reason for support to have broken. Here's a Darvis level. That's another reason for support. So if you're looking for a catalyst to more sell orders coming into the market, resistance, sell orders are parked there. That's why it's a resistance level. If we're looking for bearish momentum, look for key support levels to give way, to break. And that's how you can look at sort of the price at which that potential sentiment or move could happen. And then beyond that, gang, I'll say what I always say. I don't know, right? I always look for what's the structure and what are those price levels that could usher in that move. And there are plenty of people that'll talk about what's going to happen in January and what's going to happen in June and what's going to happen, this Wednesday and I don't know. If I knew all that, I'd already picked the Super Bowl winner and put a lot of money in on that. If I could tell the future, right? So we just can't work that into our trading process, gang. Listen to me now, believe me later. If we could, I would think that I've already after 30 years developed a process for it. But I'll tell you what, the longer I trade, the more I know. There's no way we know where a market's going to go. We can only know what we want to do from a certain price. All right, next up, Miles asks, yep, long bond. Long bond's coming up against Darvis resistance. Sure is. It sure is. And we're neutral. Right? We're right there. Great observation. Let's see. I'm thinking about opening a short position on a short position and then long on the pullback. Well, you know that if we're going to get a short, I need a pattern and I need some kind of confirmation that this Darvis is holding. So I like what you're thinking. And the thinking is basically this. Is this Darvis here truly overbought? We could probably even create a zone if we were to extend over this Darvis from June. So we have a zone, neutral market trend, right? So if we have a neutral market trend and we're reaching resistance, now we can talk about an overbought level, whether that's whatever tool you're using for overbought, oversold understanding. I would also look at the pattern in here. Yeah, but I can't buy the pullback until we're in a trend, right? So overbought resistance and a fade is valid because of the structure, but the pullback is not valid also because of the structure, which means these lows down in here, maybe this Darvis level in here could be support, right? Could be support. And therefore, if I'm looking at overbought resistance in that area, on the flip side, what's oversold support, what's oversold support. And then that's where either a slow stow, the V-score, or whatever oscillator that you like to use to identify overbought and oversold, ceilings and floors in CHOP, put that to work. But no pullback buys, because for me, that's a trend follow, and I don't have a trend here quite yet. All right, next up is Marietta. No, as far as TradeStation goes, I do not know. We do not support that platform anymore because they're not third party. There's no third party support any longer, really, because the trading app store is gone. I'm not really up to speed on that, but no, where you'll see TradeStation in my life is on TradingView. So if you have a TradeStation account, feel free to plug it in at, your account into TradingView, and then you can get your futures data and all that kind of stuff running through the platform. But no, I do not know on TradeStation itself, but I would recommend that the trading app store, not trading app store, TradingView platform be an alternative for TradeStation. And then that's it, right? So we're not supporting, the easy answer is we're not supporting TradeStation, but all my indicators are on TradingView, which does support TradeStation in that you can access your account and use your data feed for it, or Thinkorswim. All right, so next up is Priya says, no big news this week. No, I think we have a couple decent hot zones this week. Not like last week, but we have a couple decent ones this week. So if you haven't checked out the economic calendar, I would definitely keep an eye on Lagarde. ISM services can move the market. Absolutely. Bank of Canada could, if they are less hawkish, gang. That's happened once before, so that's a definite maybe. Core PPI and PPI, gang, that could on Friday could not like last week, admittedly, but there are some hot zones that could be in play to move the markets around this week. Yeah. There are channels that prognosticate. We are socializing. I think the channel runners know. Oh yeah, Mr. Walker. Yeah, as far as the folks on television, gang, I don't mean to say I don't mean it to say to be salty. I don't say this to be mean. I say this because someone told me when I was a trader, very young, and luckily I believed them and understood that, and I'm passing it on to you. Television is entertainment. That's it. They're there to entertain. They're there to promote themselves, right? And I think it's really interesting. We like to think kids are so naive, right? Kids are so naive. I don't know. I see a lot of naive adults out there too, because such and such or so and so's on television saying buy this and buy that. Clearly they must know, because we give a lot of credence to TV. We give a lot of credence to people that are on media because we think, well, surely they're there because they're experts. Gang, they're there because they have PR people that get them on television. You want to see me on CNBC next week? I make maybe two calls, and you'll see me sometime in December. That's how it works. That's how it works. PR people get you on television, right? They have the contacts and make the phone calls, and then you go through the process of submitting your research. I mean, that's the truth, gang. That's how they get on television, and it's very time consuming. I've always been fascinated by people who spend an inordinate amount of time on TV because I've done it a few times, right? Why did I do it? I was looking to promote myself. That's why I got on television, right? I was looking to promote a book back in the day, or something that I was doing. So what's really interesting is, a car comes and gets you. It's really kind of funny. It's fun. The first few times you do, it's kind of fun. Car comes and gets you. It takes you to the studio. Do a hair and makeup. They prep you. You're sitting. You're getting mic'd up. I mean, it's kind of exciting the first couple times, and then the camera goes live. You do your thing. You're done in 180 seconds. And then you're back in the car going back to your office. It's a 3-hour extravaganza for maybe a 3-minute hit. Yeah. So thanks, but no thanks. I'd rather be here with you all and working my charts. All right. Let's see. Hey there, Yee Yee. How are you, my friend? How do I interpret this? 5 red prop dots printing. Okay, so yeah, 3-8 cross followed by yellow prop dots followed by green. What's the if it's a double red environment? So it's a downtrend. So if the prop dots are plotting, Yee Yee, what's the symbol you're looking at? If you are looking at it. Um, but if you're looking at a red trend and those dots are above price action, that means it's all just pointing to a pretty well structured downtrend. Yeah, so if the dots are above, that's resistance, right? If dots are below, that's support. And that's what we look that's how we look at it. That's how we look at it. Huh? That's it. All right. So I hope that makes sense. Um let's see. Gang, I'm out of time, aren't I? Yeah, I'm out of time. Gang, so I apologize for the confusion about the time. That's on me. I will make sure I check the YouTube programming. It's probably left over from before. If you're getting the alerts from the rooms, we've updated those to 6:30 to 7:30. So I'm sorry to keep you all have kept you waiting. 6:30 from now on, 6:30 to 7 like today, and I'll check the programming and all that stuff so we're all on the same page. So thanks for sticking around, and thanks for giving me the feedback, because a lot of folks said, "Hey, Rod, this later time works better." So we'll see. We'll see if we end up going back to 6. I doubt it. We seem to be getting pretty good feedback on this 6:30 start. So thank you very much for being a part of the weekly show. I'll see you all tomorrow morning for charts and coffee. And again, thank you for your questions. And if my answers ever seem like, oh, Rog, you're lecturing me a little bit, I kind of am, because I care. I want you all to do well. And if certain things worked, and I could show over not years or months, but decades, I would say, yeah, gang, listen to everyone on television and let's guess on where the markets are going to be in March. I wish we could do that. I really do. But until my flux capacitor in my DeLorean is working again and I can zoom back and forth through time, us mortals have got to do what we can, which is trade what we see. Thank you as always. Be good to each other. I'll see you tomorrow morning for Charts and Coffee.